not alone in that downtrend, to be honest. If you look at the Asian markets right now, they are showing a downtick of anywhere between 1 to 2%. Nikkei being down almost 2.5%. There's a lot of rout happening in the currency world as well. Even commodities are coming under pressure with the crude now hitting that 85 mark to the dollar. And even if you look at the currency world, whether it is pound or yen or even euro, they're sitting at that 20-year low level. So a lot of red across the screen. Having said that, the only solace that bulls have for now is the fact that at least 17,000 is being held at the moment, just by the skin of its teeth, 15 points higher. But other than that, there is nothing much to talk about, because look at the carnage in the broader market. The mid-cap index and the small-cap index is down almost 4 percentage points. So that's the kind of a move that we are seeing. And the advanced decline ratio is completely skewed in favor of declines. It's 1:19, the advanced decline ratio, and that's the worst that we have seen in a long time. And that is also underscored by the fact that India VIX has surged 9%, telling you there is this nervousness ahead of the two big events which are lined up. There is the RBI monetary policy meeting. We'll get to know the outcome this Friday, and of course, the monthly options expiry as well. But Winnie, since we're talking about what's happening across the globe, commodities is getting impacted and GRMs as well.
Absolutely. Look at the fall. Singapore GRMs are mirroring the massive fall that we've seen coming in the crude prices and hitting the lowest levels as recession fears are actually rising in as well. Now, let's go across to Somit, actually standing by to give us why is this happening, the reason behind this, and the stocks that will be in focus on the back of this crash today. Somit?
Well, if you see, the Singapore gross refining margins have been trading around the negative territory for quite a bit now. In fact, right now it's trading at around negative $0.1 per barrel. Now, it had touched its peak on June 21st, hitting the mark of around $30.5 per barrel. And since then, we have been continuously seeing a decline in the Singapore gross refining margins. Now, three reasons behind this. Firstly, the recession fear. Second is the softening demand that we have been seeing. And third is the fact that China has released additional export quotas of around 1.5 million tons, which means that additional refined products will be in the market, and these are the three reasons why we have been seeing such a sharp decline in the Singapore gross refining margin. Now, what is the GRM? GRM is what an oil refiner earns from converting every barrel of crude into a refined product. So, which companies does this impact? Firstly, it impacts the pure play refiners like MRPL and Chennai Petro. Then there are oil marketing companies like IOCL, BPCL, HPCL, and then there is Reliance Industries, which also gets impacted because it has the largest refining unit in India. Now, a negative gross refining margin means that the oil refiners are earning losses by converting every barrel of crude into a refined product. Hence, we are seeing a sharp fall in the pure play refiners like MRPL and Chennai Petro. Now, for oil marketing companies like Indian Oil Corporation, BPCL and HPCL, if you see a sharp drop in crude prices, in fact, is a positive. Because of this, they have started earning a good amount or lower losses or a good amount of profit by selling every liter of petrol and diesel. Now, earlier they were making a losses of close to 15 rupees on selling every liter of diesel. Right now the losses have come down to only 5 rupees, while on petrol they are earning around 11 rupees from a losses of around 5 to 6 rupees that they were incurring 2 months back. So for oil marketing companies, a sharp drop in crude prices is positive, though negative GRMs will impact the refining margins. But when it comes to pure play refiners like MRPL and Chennai Petro, a sharp drop in Singapore gross refining margins will definitely impact the financials going forward.
Okay, Soma, thank you so much for putting it into perspective. So yes, commodities coming under pressure. Crude prices have come down to $85 to the barrel, and GRMs as a result of all of this is in the negative territory, not to talk about the demand fears that we are seeing on account of recession. Let's take the discussion forward with our guest on the show then. Kunal Bothra, as always, joins us for a technical check on the market, and Ashish Maheshwari, the director at Blue Ocean Strategic Advisors Private Limited, is also on the show with us. Ashish, first coming to you, how does one play this entire theme of crude coming off, GRMs going into the negative territory, and a view on the entire sector?
Sometime GRMs are hovering around $3 per barrel, from $30 to $3. It came down in just last 3 months, and right now as they have moved to negative territory. Again, the reason is as the rate hikes are going to take place, like the fear of recession is building up, not only in one or two economies, almost in every economy, first of all. And in my view, till the time this interest rate hike cycle will continue, crude cannot go up, because now central banks are cooling down their economies and trying to bring down consumption. So my idea will be though these negative GRMs are not sustainable for long, because OPEC and other OPEC plus countries will try to curtail production and will try to maintain some margin. But I think $2-3 per barrel is a reasonable margin. But the problem is these kind of margins are sustainable for or are going to be a trend for at least now for 6 months, because interest rates are not going to come down for sure in next 6 months till the time inflation cools off. So the major turmoil will be there in crude market, and we are witnessing that also. And it will affect Reliance Industries because they are one of the biggest refiners and had enjoyed even $35 a barrel in the last quarter. And this quarter, if they'll just do $1, significantly we'll see dent in the profitability. Ditto for MRPL, ONGC, etc. Even BPCL is also into refining, so some effect is going to be there. So negative for oil refiners, this particular development, and I think this will continue for some time. So let's not be in haste to buy these stocks looking at the fall which is coming.
Okay. Thank you so much for that, Ashish. That's the fundamental side of the view coming in. But Kunal, coming to you, obviously, right now Ashish was also mentioning how it affects, Reliance coming in as well, ONGC, the oil marketers as well. Now, how are you looking at the charts for this one? Any specific company that you're looking at then in this space?
So Reliance is what I've covered up, for this discussion, and the charts are at a point where the stock has come back towards a major support point for itself. So when I look at it from the June lows, the stock has come back towards the 2350 mark, 2400 levels. When I look at it over the last 2 years for Reliance Industries, the stock has come back towards a major trendline support. Now this is going to be a big trendline support for Reliance Industries, but if the stock is is able to break below this support point, it could be a big breakdown for the stock price over the near term. So we'll wait out for a point where 2350, 2360 could be a good support for Reliance Industries. But if the stock breaks below those support points, we could be, or the charts could be signaling that the stock would now get into a major downward trend, possibly even a 5% to 10% kind of a correction below those levels could be something which you can spot on the stock.
Okay, so that's the word coming in on Reliance Industries. We'll do one thing. We'll slip into a very short break with the news that Nifty is at least holding on to 17,000 for now. But stocks like Tata Chemicals, M&M Financials, Power Grid, Obra Realty
Slipped below the 17,000 right now when you were talking.
Well, yes, so it wasn't the case to be. 17,000 has also been given up. Let's see whether we are able to see any of that buying on dips which was working out in the earlier weeks or not. But for now, 17,000 has been broken on the Nifty. It's a broad-based sell-off with all the sectors in the red and stocks like Tata Chemical, RBL Bank, Power Grid being your top losers. We'll take that break and be right back.
Powered by Housing.com.
It's again a very apt, very good question.
Nikunj, first of all, thank you so much. You are one person I've always enjoyed interacting throughout the last 15-20 years.
The problem on coming on your channel is that you already know everything. I just heard your introduction. And what can anybody add to that?
Stock markets is a numbers game, and it sometimes does come across as one-dimensional. But what people don't see is that these numbers, when strung together, tell a story. There's no really black or white. It very much seems to be a work in progress of triumphs and mistakes, greed and fear. And I bring you that story behind the numbers in action.
the personal finance show that helps you achieve all your financial dreams.
This show gets you everything that you need to know about your money, how to earn more, invest smartly, and spend while getting the best bang for your buck.
From the perfect home to early retirement and everything in between.
Real estate, everyone knows, is an asset that Indians absolutely love, maybe even more than gold.
Join us every weekday at 5 p.m. on the ET Money Show. Investment made easy. Only on ET Now.
With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
But if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge.
See, Nikunj, you are a very seasoned market observer, and therefore you may hit the nail on the head.
I think you have always kept the focus on the retail investor, and I think it's again a very apt, very good question.
Nikunj, first of all, thank you so much. You are one person I've always enjoyed interacting throughout the last 15-20 years.
You know, the problem on coming on your channel is that you already know everything. I just heard your introduction. And what can anybody add to that?
Stock markets is a numbers game, and it sometimes does come across as one-dimensional. But what people don't see is that these numbers, when strung together, tell a story. There's no really black or white. It's very much...
Welcome back, and you're watching Buy Now, Sell Now on ET. Now, before we take your stock-related queries, let me go across to Ashish to just understand, how a retail investor can actually protect their wealth. Especially, Ashish, right now we're seeing such volatility coming in. Plus, today, look at the fall in the markets. So, what should retail investors be doing to protect their wealth?
See, first of all, we should not panic. In fact, whatever is happening, it is all global phenomena. And nothing is specific coming as far as negative to India is concerned, except in this week, RBI may increase rate by another 50 basis points. So we have seen whenever rate hike, etc., such event takes place, market becomes volatile, and after 1 or 2 days, rates are absorbed, and again market take its own direction. So my suggestion will be all sell-off should be used as an opportunity to, first of all, no need to panic to liquidate your position. Second, start gradually buying, in fact, stocks in pharma sector or paint sector, which are going to be beneficiary of this fall, as well as FMCG pack, because their raw material prices are going to come down and they'll be least affected what is happening globally. So even funds are going to do that. This will be part of they're hedging that they are going to buy more and more pharma, FMCG, and those stocks which are going to be positively affected by falling crude prices. But for sure, no need to panic as such. Our markets are healthy, and there's just in last 3 months, as our market went up by 9% so some cooling off is happening at this point of time. But nothing to worry as such, because fundamentals are still strong, and the way GBP is falling, euro is falling, we stand to gain only out of all this.
Hold that thought. Let's go across to Dipan Mehta as well. He's joining us to make sense of what's happening in the market and the free fall that we are witnessing at the moment. Dipan, hi, good morning. Thank you so much for making time. 17,000, and this is the time when a lot of retail investors start to panic. Given the specific moves that we are seeing in the broader market, across the sectors, we are seeing a downtick of around 5 to 10%. What would your recommendation and advice be to the investors at this point of time? Is it too late to sell already?
Yeah, good morning, and thank you for having me on your show. Yes, I think maybe it's a bit late to sell at this point of time. And although the index has corrected to 17,000, a lot of stocks have corrected even higher. And broadly, I think it's best for investors to just ride out this particular storm, wait and watch, and then when things start to settle down, I'm pretty certain that the upswing which we saw in the beginning of the month, right until a few days ago, that should resume pretty much soon. So I'm not that perturbed. We are feeling the tremors of what is happening globally, but we have seen this many times in the past several decades, and these things tend to settle down. And if the underlying fundamentals of the economy are good, as is the case with India, then I think eventually we should see a resumption of the move.
Is this just a one-week downtrend given those big events in terms of the RBI monetary policy meeting, etc. lined up? Or do you expect this sort of nervousness to continue for the rest of the year as well?
See, I think we are living in very uncertain times, and there is heavy news flow as far as policy action is concerned, not only in India but globally as well. So let's just take each month at a time. I think what is happening today is we are discounting a very tough RBI policy in terms of increase in interest rates and the commentary which may come through. So let's just let this event actually get played out and get discounted in stock prices, and then maybe look at whether the rest of the year, how it is shaping up. One very important event is going to take place from next month, and that's the beginning of the earnings season as well as the beginning of the festive season. And both are expected to be excellent. So if companies start to report better numbers and they have been able to pass on inflationary pressures which they are facing, and if volumes are intact, then I think the sentiment will start to gradually improve into equity. So I am not ready to throw in the towel at this point of time as far as stocks are concerned, or even as far as what the trend would be for the balance 3-4 months of this year.
Okay, Deepan, thank you so much for that. But with that, let's get started with all your stock-related queries. You can send us your queries either on YouTube, Twitter, or even on the WhatsApp number. So do send us your queries. We'll be taking them right off and right now. Let me start then with the first query coming in. And Kunal, this one is coming in on Glenmark Life Science. This query is from Jay Kishan. And he's bought Glenmark Life Science at 500 shares at 700 rupees. They're making a heavy loss coming in here. What should they be doing with this one?
I think they should exit the stock now, even though the history is a bit limited for Glenmark Life Sciences. But then, right from the time the stock, or the price was almost at 700, 750, the stock has been consistently going into a downward trend. I think this is the consistent attempt for the stock to try and make this pattern into a downward trend, and doesn't look very attractive.
He's asking that she holds shares of Ambuja Cement and Devyani Lab, 70 shares of Ambuja Cement at 550 and 30 shares of Devyani Lab at 3,750. They want to get a fundamental view given their long-term investor with a 1 to 2 year horizon. Let me come to you, Ashish, for your view on this one, Ambuja Cement and Devyani Lab.
See, Ambuja Cement, only one concern is the stock has moved northward in very limited time. So people who have bought this stock at lower level are sitting on plenty of profit. So like your chart is also showing 28% in a month kind of rally Ambuja has witnessed. So some amount of profit taking is bound to come. But at the same time, the fundamental of the company is quite strong, and the way cement consumption and prices are going up, they are also positive. So if you are having 2-year horizon, I suggest at this point of time you can exit and try to re-enter the stock at 475 level, where valuations will be also attractive. As far as DV's Lab is concerned, again, this is a stock of late has started moving, and as I earlier said in the show, that pharma is a sector now where money will go in. So DV's Lab, you can continue to remain invested for a couple of years, all right.
Ashish, actually, I'm going to come back to you. We have a viewer who wants to know the long-term view coming in on Campus Footwear. How are you looking at this one?
Yeah, I'm quite bullish on Campus Footwear stock, and one of the best performer stock, lower like we have seen in the last 3 months, though today's stock is down, but nothing to worry. Some amount of profit taking is happening. 3 months, 70% return. What else you want? And this will continue because the kind of positioning they are having, the kind of quarterly numbers are coming, and the way consumption is picking up in this particular sector. I think some money even is shifting from Bata and Liberty shoes to Campus. That's the reason stock is performer. So continue to remain invested. In fact, if it falls by 10% more from current price, it will be shouting buy.
Okay, Ashish, point taken. Kunal, Satya CK is asking a question that you had earlier advised them to wait for a correction before buying into IndusInd Bank as well as Cipla. They're asking, is this the right time now to plunge, or what are the levels tend to find a good entry opportunity?
Well, not to plunge, but yes, take a dive into IndusInd Bank. I think it's a good chart. The stock has also corrected. So, this is what I was indicating some time back as well, that when you're buying a good quality stock, wait out for a point where the stock corrects, maybe approximately 10%, 15%, that kind of a band. I think that could be a first good entry point for buying such kind of quality name. So I would suggest a go ahead on IndusInd Bank. But for Cipla, I would still wait out, because the stock seems to be still getting into a zone of underperformance. I think a better bet on a relative strength basis could actually be Sun Pharma. The stock is showing a lot more stronger signs. 900 seems to be a good base, or 880 seems to be a good base for Sun Pharma. So if it's a short-term kind of a play, then I would suggest keep a stop loss of 880 and look out for Sun Pharma instead of Cipla. But yes, IndusInd Bank you can look to buy at current levels.
Okay, Ashish, this next one, next query we have is coming in from Lieutenant Colonel Narinder Singh from Pune. This one is a broad-based query. They want to capitalize on this China Plus One strategy, PLI schemes, and they want to invest about 3 lakh rupees in stock market right now on these schemes. They're looking at stocks like Tata Chemicals, Aarti Industry, Deepak Nitrite, and Lakshmi Organics. Any 2 stocks that you would suggest from this for a long term?
Yeah, I'll suggest first Tata Chemical. I think after this some correction, which as we have seen of late in Tata Chemical, this is a good time to look at, because again the caustic soda prices are quite steady, and the kind of capex Tata Chemical has planned in the next couple of years. This is a stock where you can expect at least 30 to 40% upside in 1 to 1.5 years itself, if caustic soda and liquid chlorine and acid, what they make, the prices continue to be even steady. Second stock which I like is again Lakshmi Organics. Again, they are the market leader in the segment where they are working, and we have seen good set of numbers also coming from Lakshmi Organics. The stock has of late started performing after a little period of almost 6 months. So from here, like if you get in this correction, this stock at 10% decline from here, start accumulating Lakshmi Organics for a couple of years perspective for sure.
So 2 bets coming from the chemical space, Lakshmi Organic as well as Tata Chemicals. So keep two of these stocks on your radar as well. Moving on, Devi Das wants to know, is it a good time to average Tata Motors at the current market price? Kunal, what would your suggestion be?
Well, I would suggest to wait out for maybe a couple of weeks. The stock has gone into a very sharp correction as compared to most of the other auto stocks. So there are 2 points to remember. One is that Tata Motors did not participate as wholeheartedly when most of these auto stocks were making 52-week highs or life highs for themselves. And on the other hand, when the markets were getting into a phase of correction, this was one of the first stocks which actually formed a corrective phase some time back. And so it's been an underperforming stock on both of the price uptrends as well as the price downtrend. Purely in that aspect, I would suggest to wait out. If there is a better alternative which you're looking out from the auto pack, then I would suggest either go for Maruti or M&M at current juncture.
Ashish, this next query we have is coming in from Sunita from Bangalore. Wants to know what is the best level that one could enter in BEL and Tata Power for a long term?
See, Tata Power, I'm not asking to buy right now. Also, though stock has seen a decent correction, and again, the reason a lot of retail investors have struck up in this particular stock from almost 70-80 rupees up from here. And at every rise, we have seen pressure coming in Tata Power stock. So, and at the same time, whenever market falls, this is the first stock which comes down. So Tata Power, I think you can wait for some time till the time stock shows some strength. And which was the other stock?
The other one we have is coming in on, 1 minute, I'll have to find the query, Tata Power and BEL.
Okay. BEL, I think post this bonus issue, stock looks attractive, and whenever you get this stock in again, I think in 2 digits is it will be a good buy.
Okay, Ashish, let's move on and let's get a couple of queries for the metal sector as well. We are getting a lot of queries on Nalco and Vedanta. Why don't you club them together and tell us what's the 1 to 2 year view on these metal names?
See, problem is when USD will start showing a strength, which we are witnessing right now. So all metals are going to underperform, number one. And number two, as we are having this recessionary fear coming in on all economies, metal stocks and metals can't perform because if the economic activity will slow down, the first jolt will be on all these metal companies. So my suggestion will be to avoid BEL or Nalco for some time. Let's see when this interest rate cycle take a pause, then we'll take a call, but not right now.
Okay, Kunal, this next query, we have 2-3 queries coming in on IEX actually. One is from S. Krishna Kumar and the other one is from Shushila. Now, Krishna Kumar has bought IEX 5,100 shares at an average price of 164 rupees. What's your view for the next 3 to 4 months? And Shushila has bought it at 248 rupees. So could they continue to hold, exit? What's the view?
And 248 is of course a steep price for IEX. But then my sense is that, and I've maintained this stance over the last, I think, 1 or 2 months as well, that till the time the stock doesn't complete a correction and comes back towards 125 point for IEX, there is no point to trying to average the stock, because that's where I believe major supports would start emerging for IEX. 125 from current levels would be approximately 12%, 13% correction further from current levels for IEX. So assuming the market correction gets into a bit of a worse phase from current levels, I would expect IEX to test those levels at closer to 125 is where I believe you should average.
Okay, that's the view coming in on IEX. But on that note, viewers, we're going to slip into a very short break. Don't go anywhere because we will be taking more queries after this break.
आग को फैलने से रोकना मुश्किल है.
Seems to be a work in progress of triumphs and mistakes, greed and fear. And I bring you that story behind the numbers in action.
The personal finance show that helps you achieve all your financial dreams.
This show gets you everything that you need to know about your money, how to earn more, invest smartly, and spend while getting the best bang for your buck.
From the perfect home to early retirement and everything in between.
Real estate, everyone knows, is an asset that Indians absolutely love, maybe even more than gold.
Join us every weekday at 5 p.m. on the ET Money Show. Investment made easy. Only on ET Now.
With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
But if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge.
See, Nikunj, you're a very seasoned market observer, and therefore you may hit the nail on the head.
I think you have always kept the focus on the retail investor, and I think it's again a very apt, very good question.
Nikunj, first of all, thank you so much. You are one person I've always enjoyed interacting throughout the last 15-20 years.
The problem on coming on your channel is that you already know everything. I just heard your introduction. And what can anybody add to that?
Stock markets is a numbers game, and it sometimes does come across as one-dimensional. But what people don't see is that these numbers, when strung together, tell a story. There's no really black or white. It very much seems to be a work in progress of triumphs and mistakes, greed and fear. And I bring you that story behind the numbers in action.
The personal finance show that helps you achieve all your financial dreams.
This show gets you everything that you need to know about your money, how to earn more, invest smartly, and spend while getting the best bang for your buck.
From the perfect home to early retirement and everything in between.
Real estate, everyone knows, is an asset that Indians absolutely love, maybe even more than gold.
Join us every weekday at 5 p.m. on the ET Money Show. Investment made easy. Only on ET Now.
With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that
semblance of the recovery is what we are seeing. The Nifty is seeing a bit of a bounce back, 60 points off the lowest point of the trading session. 17,050 is where we are at. So maybe some buying on dips, at least for the moment. Let's see whether that continues to hold or not. There is quite a bit of recovery in the broader market as well, because the mid-cap index and small-cap index have also bounced sharply from the lowest point of the trading session. And even if you look at the internals, a lot of stocks which are buzzing in trade. In fact, since we're talking about the bounce back, let's talk about the space which is bucking the trend today, and that's the IT sector. Names like Coforge, Infosys, TCS, HCL Tech, they're all outperforming today. And there's a question coming in from RA as well. They want to know, is it finally the right time to enter the likes of Infosys, TCS, Wipro, etc.? Ashish, your take on the IT sector.
See, if there are recessionary fear in US and European market, IT stocks cannot perform because if ultimately user companies are going to curtail their budget or their sales are going to be impacted, IT stocks or IT companies spending will also come down. So we need to be very cautious and selective while selecting any IT stock which we are buying. In fact, we have seen a stock like Infosys and TCS touching 52-week lows. So if leaders are not performing, it will be very difficult for second-run companies also to perform. So my suggestion will be to not to buy IT stocks in spite of whatever correction we have seen, because this quarterly numbers we are going to see a lot of impact on new order taking, etc., as well as cross currency headwinds are also going to be there. So my suggestion is avoid IT.
Now, this next query we have is on L&T. Prashant is holding L&T shares at 1,800 rupees approximately. Should they book profit here? What should they be doing?
Yeah, I think it's a good time to try and book profits over here for L&T. 1835 is where the stock is trading. Currently, I have maintained the targets of 2000 for L&T, and I think just about a fortnight back, the stock had made a high, which was just around that 1995, 1997 mark for itself. Now, I think at current levels, it could be a time where you can probably try and reduce the holdings over here, and then wait out for an opportunity, maybe another 5% to 10% lower, 100 points, 150 points further from current levels on the downside is where you can look to reinitiate a buy.
Okay, so that's the word coming in on L&T as well. In the meantime, we have Hari Varijakshan from Abu Dhabi wanting to know about Apollo Tyre and Seat Tyre. And the question, Ashish, is which of the two is better for a long-term opportunity with a 2 to 3 year horizon? What's your take?
See, tire as a sector looks promising. First of all, what has happened is their rubber prices have come down. At the same time, offtake from automobile companies have multiplied because the kind of sales which is taking place in spite of all the odds in two-wheelers and four-wheelers, I think tires are still to get their share. So my suggestion will be to gradually start looking at tire as a proxy play to automobile sector. And here again, my pick are first of all MRF. I'm very bullish here. In my view, whenever this stock comes at around 75,000 rupees, you should buy MRF for sure, because this has the potential to touch this time 1 lakh kind of number in next 6 months. And another stock which I like is the CN.
Kunal, this next one is coming in from Asha from Bangalore. This one is on Asian Paints October call option. 3,450 call option at 30 rupees. What should they be doing? What's the target for this one?
See, I would suggest to avoid the option now. I understand that Asian Paints could be a direct beneficiary in terms of the fall in crude oil prices, but then the indicators on the charts are signaling that the stock has come back, or the indicators have come back into a bit of a downward trend for themselves. So the MACD has broken some key supports, the EDX has broken some key supports for itself, and that may generally not augur very well from an option trading point of view. So I would suggest to avoid. If you've not taken the trade, I would suggest to avoid.
Okay, it's an avoid coming in for Asian Paints, at least at the moment. That's what the chart check is suggesting. But let's move on and get another query going. Aarti wants to know the view on Deepak Nitrite. Now, Ashish, this entire China +1, Europe +1 theme has been working out quite well, at least for the last couple of weeks. But do you think this could be a sustainable investment bet? Your call on the entire chemical space and Deepak Nitrite as well.
Yes, this is again a space which I like as a whole. First of all, now whatever the fears related to China dumping, etc., are behind us. And the kind of capacity built up these domestic chemical companies have done, I think they are going to be major beneficiaries in long run for this China +1 concept. And only one apprehension is that a lot of these companies are exporting. So as now there's slowdown in US and European market, so some pressure is going to be there in chemical prices also for these players. So the kind of handsome margin these companies have enjoyed in last 1 year may not be sustainable. But as these companies, most of them have become very low on debt or debt free, so they can survive even lower realization from their finished product. So Deepak Nitrite is again a stock which I like to add on decline, because again they are market leader, and the kind of capacities they have created over a period of time, they will continue to do well. So Deepak Nitrite is a buy in long run.
Ashish, I'm going to actually come back to you. We have a query from Siddharth from Bangalore. Could you provide some fundamental view coming in on M&M Finance and Canfin Homes? Obviously we've seen some correction coming in over here, so long-term view on these two.
Both stocks have fallen because of their own reasons. Like there need not to discuss because everybody is aware about it. But fundamentally, both companies are strong, and the kind of movement that we have seen in credit offtake of both of these companies, there's no doubt as far as business fundamentals are concerned. But as now for short term, there are negative news related to both the stocks, so some pressure is going to be there. And when the market is falling, those stocks where some negative news or negative developments are there, traditionally they intend to fall more. So this is what's happening with M&M Canfin Homes. In my view, you can buy these stock on further declines, but don't add now, because still I see some more selling coming in both the stock. Maybe once market stabilizes, then you can look forward to enter in both of them.
Okay, so that's the view coming in on M&M Financial. Don't be in a hurry to just buy yet. Kunal, this is a bit more broader question, but one of the viewers wants to understand the prospect for Nifty Bank going forward. From the record high level, it's corrected, what, 6-7% already? Where is it headed from here on?
So I think, as I mentioned earlier, that the indices, they typically tend to bounce closer to their short-term or long-term moving averages. So you look at it comparatively, Nifty has retested the 200 DMA. Bank Nifty in this phase of correction in the last 3-4 days has corrected exactly at that 50-day moving average. Now the indicators are come back into a deep oversold territory, which means what could initially happen is that for the next couple of days we might see the Bank Nifty trying to just about stagnate at this 38,500 mark, maybe plus or minus 500 points. That could be a broad range for the Bank Nifty. If you're looking at a shorting opportunity, it's best to wait out for a period of bounce, maybe closer to 38,800, 39,000. That could be a very good point where you can look to initiate a fresh short on Bank Index. So I would expect maybe the next couple of days 38,500 mark to be acting as a pivot support. Any bounce from those levels should be taken as an opportunity to create short.
This next query, Ashish, we have is coming in from Krish from Chennai. This one is on Page Industries. They have 3 shares of Page Industries at 45,000 rupees. Should they continue to hold this for a next 3 to 5 year period? And they're saying, will it, give the 6-digit figure coming in for Page Industries?
6-digit figure is difficult actually in Page Industries because valuations are rich, and the valuation what they are getting is because of, first of all, less floating stocks, second, the branding what they enjoy, and the kind of growth we have seen from COVID period to present time frame. And this is the kind of growth which may not be sustainable or exponential going forward also, because a lot of other competitors are foraying in this venture, and because of e-com revolution, they are also getting their market share. So my suggestion will be, let's be realistic and keep a target of 65 to 70,000 maximum for Page Industries in that particular time frame. And on decline somewhere, whenever you get this stock at 40,000 odd levels, this will be a good buy also.
Page Industries is a good buy, perhaps for some sort of upside, but of course 6-digit figure is a bit far away. Akshay Bandari wants to know, Kunal, the technical view on Devyani International.
Well, I would be bullish on the stock, and I think closer to 175, in fact I maintain the stance that closer to 175 should be a point where you can look to accumulate the stock. Time and again, at least over the last few months, the stock has tried to take a lot of support from this 175 mark. There have been periods where the stock has gone below the 175 level, but the intensity of bounce above the 175 mark is a very strong indication that the stock has found a good support, or this is a point where there's a lot of demand for the stock at 175 mark. So I would suggest a buy, but then closer to 175 mark.
Okay. Ashish, this next query we have is coming in from Shweta from Goa, and this is on Dilip Bilkon. She has 215 shares of Dilip Bilkon at 243 rupees per share. Should they continue to hold this or sell?
Yeah, there are a couple of problems. First of all, infrastructure sector as such, in this particular sector, not too much appetite is there. Second thing, as the interest rates are going up, so their margins will be also affected in short to medium term. And this is the reason why these stocks are also coming down. So as I suggested, instead of this, look at the stocks which are into paint, pharma or FMCG, which can give you a more steady return, and whatever the interest rate hike, etc., which is around the corner, these stocks won't be affected. So look at a stock like Nestle or Britannia or Indocora Medis and Pharma, which can give you better returns compared to Dilip Bilkon at this point of time.
Okay. Viewers, on that note, we are going to slip into a very short break, but Ashish as well as Kunal stay on with us, because after this break also, we will be taking more queries today.
We'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
And if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge.
See, Nikunj, you're a very seasoned market observer, and therefore you may hit the nail on the head.
I think you have always kept the focus on the retail investor, and I think it's again a very apt, very good question.
Nikunj, first of all, thank you so much. You are one person I've always enjoyed interacting throughout the last 15-20 years.
The problem on coming on your channel is that you already know everything. I just heard your introduction. And what can anybody add to that?
Stock markets is a numbers game, and it sometimes does come across as one-dimensional. But what people don't see is that these numbers, when strung together, tell a story. There's no really black or white. It very much seems to be a work in progress of triumphs and mistakes, greed and fear. And I bring you that story behind the numbers in action.
The personal finance show that helps you achieve all your financial dreams.
This show gets you everything that you need to know about your money, how to earn more, invest smartly, and spend while getting the best bang for your buck.
From the perfect home to early retirement and everything in between.
Real estate, everyone knows, is an asset that Indians absolutely love, maybe even more than gold.
Join us every weekday at 5 p.m. on the ET Money Show. Investment made easy. Only on ET Now.
With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
But if this cup of coffee is costing you 25 rupees right now, after 5 years,
Okay, so that bounce back seems to be getting sold into, at least at the moment. 17,020 is where we are at, but at least from the lowest point of the trading session, there is a bit of a recovery which is underway as we speak. Let's move on and get some more queries going. And this one is a broader market question coming in, Kunal, wherein the viewer wants to understand, is it a good time to buy the Nifty at the current level? And if yes, can you highlight the top 2 to 3 stocks that are there on your radar?
Well, if you're a short-term trader and you're looking to, look out for maybe 100 point to 150 point jump on the Nifty, then I think at current levels it's a good strategy to try and buy the index because the indicators have come back into an oversold territory. Now, 2 stocks which I would probably want to suggest at current current levels, assuming if the market gets into a bounce back phase, I think Ipca Lab could be one of the stocks which you can look to buy. 888, 89 is where the stock is trading on the spot level. So that could be a point where you can look to initiate a buy, maybe a 920 target. And then Sun Pharma is the other name which I've been advocating as a buy. I think the stock looks quite strong, more formidable name from the pharma pack at current levels.
Ashish, this next query we have is coming in from Gopal Rao from Nagpur, mid-term to long-term investor. They bought 1,000 shares of HCG, that is Healthcare Global, at around 290 rupees per share. Should they buy more, and if they should buy more, at what price? What's your view on this one?
Okay, at what price investors bought this stock?
Per share.
Okay. So I think you have bought this stock although at a good price, but you can continue to remain invested here because of late we have seen some amount of buying again emerging in stocks like Apollo Hospital, etc. So once like we'll see more buying in pharma, as I was telling, buying will also emerge in healthcare stock because these are again the stock which are more domestic economy related stock, and there's no issues related to what global factors are there. So I like Apollo more though, but HCG is also a stock which can be kept on radar, and on some more decline, surely it can be added.
Okay, then let's get started with the rapid fire, and obviously our guests know we'll be taking queries very quickly. Kunal, let me come to you then. The first query we have from Yash from Ajmer. Bajaj consumers he's bought at 152 rupees per share. What should they be doing?
I think you can continue to hold.
Okay, moving on. Ravi Chandra from UAE wants to know that he has Restaurant Band Asia stock at 125 rupees per share. Is it likely to head 175? Ashish, your take.
Yeah, continue to remain invested here.
Kunal, should Pratiksha from Muscat invest in Hero Honda UPL for the next 6 to 9 months?
Well, I would not suggest Hero MotoCorp, but then I think UPL could be a better bet.
Okay, moving on. Nino wants to know what is the outlook for Borosil Renewable for the long term? What would be the ideal entry level? Ashish.
Continue to remain invested, and if you want to further invest in this company, again 525.30 will be good levels because of the PLI etc. which has come up here. These companies will do well.
Okay. The next query, Kunal, is on Bajaj Finance. The viewer is holding Bajaj Finance at 900 rupees and HDFC AMC at 1,900 rupees. Should they continue to hold this?
Wow, I think you can continue to hold on to, I think specifically for Bajaj Finance, which you bought at 900 rupees.
Okay, and Kunal, Abhijit wants to know the short-term target for 3 to 6 months on Coal India.
Well, I would believe that 240 to 45 could be a modest resistance for Coal India. I think that's where you can probably position a target for the stock.
Ashish, Bajaj Finserv, long term, should the viewer be looking to buy?
Yeah, for sure.
Okay, and Abhinay wants to know that could he buy Suzlon at this point of time? Kunal.
Completely avoid.
Anand from Gurgaon, Kunal wants to know Maruti Suzuki and M&M for a midterm. Is it a good buy right now?
Well, yeah, I've been very bullish on both these names from the auto pack, and I think at current levels, 5% down approximately from their previous swing highs. Good time where you can look to initial buy.
Ashish, there's a question on Balaji Amines. Your view?
Instead of just Lakshmi Organics is better bet.
Okay. And with that, we're absolutely out of time for the queries segment. Thank you so much, Kunal, as well as Ashish. And actually, we're absolutely out of time on this edition of Buy Now, Sell Now as well. Thank you so much, viewers, for tuning in to Buy Now, Sell Now. But don't go anywhere. Markets at noon will take the action forward.
आग को फैलने से रोकना मुश्किल है.
It may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge.
See, Nikunj, you're a very seasoned market observer, and therefore you may hit the nail on the head.
I think you have always kept the focus on the retail investor, and I think it's again a very apt, very good question.
Nikunj, first of all, thank you so much. You are one person I've always enjoyed interacting throughout last 15-20 years.
You know, the problem on coming on your channel is that you already know everything. I just heard your introduction. And what can anybody add to that?
Stock markets is a numbers game, and it sometimes does come across as one-dimensional. But what people don't see is that these numbers, when strung together, tell a story. There's no really black or white. It very much seems to be a work in progress of triumphs and mistakes, greed and fear. And I bring you that story behind the numbers in action.
The personal finance show that helps you achieve all your financial dreams.
This show gets you everything that you need to know about your money, how to earn more, invest smartly, and spend while getting the best bang for your buck.
From the perfect home to early retirement and everything in between.
Real estate, everyone knows, is an asset that Indians absolutely love, maybe even more than gold.
Join us every weekday at 5 p.m. on the ET Money Show. Investment made easy. Only on ET Now.
With each passing day, this market is becoming better. And with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you asked.
Indian markets catch up to the global sell-off. Nifty recovers slightly from the day's low, but still down almost 300 points. Heavyweights like Reliance Industries, ICICI Bank and HDFC Bank remain the top drag.
Amid the risk sell-off, the safe haven dollar continues to strengthen, this time about 114, triggering weakness in most other currency. Rupee and pound hit a fresh low versus the greenback. However, Finance Minister Nirmala Sitharaman argues that rupee for now has been holding strong when you compare it to some of the other peers.
Meanwhile, recession fears spook commodities as well. Crude prices hit January low with Brent futures trading near the $85 per barrel mark, leading to a sharp crack in Singapore GRMs. Industrial metals like copper and zinc also tumbled.
Palm oil prices plunged 8%. This is on back of improved supply from Malaysia and Indonesia. Palm oil makes up for a considerable chunk of raw material cost for HUL, Britannia, Godrej Consumer.
Britannia is also in focus on the back of management changes. The company appoints ex-Domino's boss Rajneet Kohli as the new CEO, whereas Varun Berry has been elevated to the level of MD and Executive Vice Chair.
Despite a weak market setup, Harsha Engineering list at a premium of 36%, extend gains to 44-45%. Management says funds will be utilized to invest in newly developed lines and further capacity expansion going ahead.
Hello and welcome. You're watching Markets at Noon on ET Now. I am Anisha Jain. With me as always is Pankaj Poddar. And Pankaj, it's not a very pretty looking screen at the moment.
All right, I can look at you and say it's not in the pink of health. So that's essentially how I would like to put it. That markets are not looking that great, and every attempt that markets are trying to make a comeback also is leading to further sell-off. And of course, you are getting news flow regarding various currencies across the world that are hitting fresh low, and similar is the case with rupee for now, 81.5, and it's not looking that great. If you are a bull in the rupee, or even if you're a FII, it's always dollar denominated return. I was talking to a fund manager over the weekend, and he tells me that globally 70 to 75% of assets are dollar denominated, and when you see such a surge in dollar, definitely there will be collateral damage across equities and across other asset classes. Nevertheless, markets are marginally above the day's lowest point, but nowhere where we can say that it's looking in good. And the problem is the mid-cap market. That's really seen the sell-off today. Some of the mid-cap names that were every day going up or trying to make a comeback or at re-rated are clearly seeing a lot of selling pressure. And it's not only that, but larger ones like Tata Motors, Vedanta, a lot of banking names which are highly FII driven are seeing some amount of sell-off that's happening in the overall space. So that tells you that there is the pressure of FII selling is pretty high.
Well, yes, the pressure of FII selling is pretty high. But having said that, the 2 or 3 spaces which are actually outperforming today is FMCG. IT, surprisingly, is the only index in the green or only sector in the green. And some of the pharma names are also doing well. But let's keep it with the macro and understand why is the market falling the way it is. Somit is joining us with that insight link as to what is spooking the market at the moment. Somit, over to you.
Well, though the markets have come off from their day's low, but from the recent high, if you see, the markets are still down by around 1,000 odd points. And what are the factors that have led to this fall in the Indian markets? Firstly is the hawkish stance by the US Fed. Recently, they did take a rate hike of around 75 basis points, and investors are expecting this aggressive rate hike stance to continue of US Fed. And it's not only the US Fed, but also the Bank of England that had recently taken a 50 basis points rate hike. And now, because of this aggressive stance of the US Fed and the Bank of England, investors are also fearing that this rate hikes would push the economy into recession. So there's a big recession fear when it comes to the US and the European economy. For Europe, it's also the energy crisis which could push the economy into a recession. Along with this, the US 10-year bond yields are trading at a 12-year high, and FIs have been also continuously selling in the Indian markets for the last 3 consecutive days. Along with this, one of the factors that has been impacting the Indian markets is the fact that the US dollar index is trading at its 20-year high, which is not only only impacting the Indian markets but also the Asian Pacific market. And lastly, the market is also a bit nervous because of the RBI monetary policy meet that is there this week. So these are mainly the factors that have been leading to a fall in the markets, and which are the stocks that have led to this biggest, which are the stocks that have contributed to this fall. Reliance Industries, ICICI Bank, HDFC Bank, TCS are among some of the top draggers for Nifty for the recent 1,000 points fall that we have seen in the Nifty 50 index.
Okay, thanks Amit for that. In fact, let's take that question across to Nuresh Mirani as well. He's joining us on the show to make sense of the technicals of the market. Nuresh, 17,000 has come under threat. Where do we go from here on?
So, say the last range that support levels of 17,400 and 17,200 have been taken out. And now the next major support is at 16,800 mark, which is where we last gave a breakout from. And also we are yet as oversold, we are not yet oversold as the global markets are. So US markets are at sub 30 RSI. We are still at 36 RSI. So that this last breakout point, which was that 16,800 zone, that is a major support right now. And overall going forward, 17,400 should act as a resistance. So expecting this to be the new range between 16,800 to 17,400.
Which are the top ideas that you have, whether sell or buy? How should you look at the portfolio at this point of time? Should it be a mix of buy and sell?
So it's a mix of buy and sell because we've already taken a good hit in the last two sessions. So the risk reward is not great for all the shorts. So first is a buy on DV's Laboratories coming back from the last week as well. The stock has held on to the short-term 3650, 3680 breakout. This can go towards 3900, a stop loss at 3640. Second is a sell on SBI Life, which is trying to make a swing breakdown. If it sustains below the 1250 mark, should be quickly targeting 1200, a stop loss at 1270.
So that's the word coming in. As far as a couple of those stocks is concerned, need to be a mix of buy and sell as well. Naresh, we'll let you go on that note. Having said that, there's a lot of action in the currency market as well. The flashes on your screen were just pointing out how rupee has depreciated further, a fall of almost 0.7% with 81.60 on the cards as far as rupee goes. We have heard it from a lot of fundamental experts on rupee as well, that 82 seems to be on the card, and very quickly we seem to be headed towards that mark. We had seen earlier that RBI had intervened when the rupee was around 81 mark. Whether it does that today or not will be important to track, because around the monetary policy meeting we have seen a lot of big moves come in currency as well. In fact, not only in rupee, the pound has also fallen to a record low against the dollar as the markets reacted to UK's biggest tax cuts in 50 years. In fact, the sterling pound could now sink to parity with the dollar as the dollar index has surpassed the 114 mark as well intraday level. Let's go across to my colleague Harsh. He's standing by to tell us what have been the movements in the currency market so far. Harsh, take it away.
Well, yes, Anisha, on backdrop of that, essentially this is on the back of the US Federal Reserve, the US Central Bank, raising rates for a third consecutive time by 75 basis points. So 2.25% re-rating with regard to especially the federal funds rate. So we're seeing on the back of that most currencies are seeing a bit of a sell-off versus the dollar. In fact, the dollar, it's largely led by dollar gains rather than other currencies which are essentially getting sold off because the dollar is now pricing in that higher interest rate. We're also seeing that among currencies, we are seeing the biggest losses for the British pound. We're seeing the pound is now down nearly 22% year to date. Of course, the record low breach for the pound, as you very correctly mentioned. The Japanese yen also saw a bit of intervention from the Central Bank of Japan, and that too, despite that intervention, is down 20% versus the dollar year to date. We're also seeing 15% down on the euro. In that relative context, the Indian rupee seems slightly more insulated. The Indian rupee down just 9% when I'm looking at it year to date versus some of these other currencies. So some of these other currencies coming under some bit of pressure. When I'm looking at the euro level as well versus its historical levels, the euro is currently at its lowest level, which hasn't been seen since May of 2002. So multi-decade low there as well for the euro. We're also seeing the lowest level on the yen versus the dollar since 1998. And of course, as you very correctly mentioned, the pound is at the lowest level ever. So that was last clocked around 1985, and this time it's breached that level as well. So we're clearly seeing pressure across currencies that we're seeing, and the rupee in relative terms seems a little more insulated.
It's so far so good, but when it starts to take a U-turn, it generally doesn't take time. So let's wait and watch. First signs of a market sell-off being witnessed on Friday, followed up by today. So we'll wait and see how things move. Meanwhile, over the weekend, there has been some interesting development on how GBP has crashed and really taken a toll. In fact, it's become 1.1, or I think even slightly lower than that versus 1.4 earlier. Sharad is now with us to give us a perspective of companies that operate in UK, have GBP denominated sales or asset, and what could essentially be the impact. Sharad, take it away.
Well, yes, pound has depreciated almost 6% if we compare it with the Indian rupee over the last two trading sessions as well. And rupee actually has strengthened against the pound, and this is coming in since the highest levels, like since August 2019. That is actually below, I mean, you could say before the pre-COVID levels as well. Now, overall the dollar strengthening has been there, of course, due to the risk of sentiment against the major currencies. But the companies which you are looking at with the percentage of revenue breakup coming from UK, up in the top is Mastek. Almost 68% of its revenues is coming from UK itself. Apart from this, we also have Firstsource Solutions and a lot of stocks coming from the Tata house. We have TCS, we have Tata Motors, from JLR, and also from the IT space we have Happiest Minds, Tata Consumer Products, Mindtree and Tata Communications as well. So most of them are having a contribution ranging between 6 to almost 30%. Now, in terms of the revenues coming in from the companies, of course, Tata Motors is having the bulk of the revenues, more than 35,000 crore rupees, and this is coming on a 12-month trailing revenue basis as per Bloomberg. Apart from this, TCS, Hindalco, they are also having a strong chunk of revenues coming in. Amongst the mid-caps, if we see Mastek, Firstsource Solutions, they are also contributing almost 1,500 odd crore rupees to the exchequers coming in actually from the UK as well. And lastly, I would also like to point out Mindtree, almost 1,000 crore coming from there.
All right, Sharad, interesting takeaways in terms of percentage of revenue. On that note, we're taking a break, coming back quickly. A hint of recovery coming in the market, 255 points down for the Nifty. When we started the show, it was as much as about 350 points.
Co-powered by Century Ply.
Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
But if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge.
See, Nikunj, you're a very seasoned market observer, and therefore you may hit the nail on the head.
I think you have always kept the focus on the retail investor, and I think it's again a very apt, very good question.
Nikunj, first of all, thank you so much. You are one person I've always enjoyed interacting throughout last 15-20 years.
You know, the problem on coming on your channel is that you already know everything. I just heard your introduction. And what can anybody add to that?
Stock markets is a numbers game, and it sometimes does come across as one-dimensional. But what people don't see is that these numbers, when strung together, tell a story. There's no really black or white. It very much seems to be a work in progress of triumphs and mistakes, greed and fear. And I bring you that story behind the numbers in action.
The personal finance show that helps you achieve all your financial dreams.
This show gets you everything that you need to know about your money, how to earn more, invest smartly, and spend while getting the best bang for your buck.
From the perfect home to early retirement and everything in between.
Real estate, everyone knows, is an asset that Indians absolutely love, maybe even more than gold.
Join us every weekday at 5 p.m. on the ET Money Show. Investment made easy. Only on ET Now.
With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
But if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge.
See, Nikunj, you're a very seasoned market observer, and therefore you may hit the nail on the head.
I think you have always kept the focus on the retail investor, and I think it's again a very apt, very good question.
Nikunj, first of all, thank you so much. You are one person I've always enjoyed interacting throughout the last 15-20 years.
You know, the problem on coming on your channel is that you already know everything. I just heard your introduction. And what can anybody add to that?
Okay, a bit of a recovery is definitely underway. We are at 17,080, so almost a 100-point recovery from the lowest point of the trading session. Not sure if it is too soon to celebrate yet, but at least it does look like 17,000 is being held and the bulls are fighting for that particular level. Having said that, in the last few minutes, we have seen a bit of up move on a lot of cement counters. Case in point being India Cements, Ambuja Cement, Ultratech Cement, even broader market names the likes of Ramco Cement, JK Cement have seen a bit of a recovery from the lowest point. So maybe we should pull up some of the cement stocks as well, and they'll tell you that right now they're sitting at the highest point of the trading session. So India Cement, Ambuja Cement are the other ones, and we can also pull up Ramco Cement and JK Cement to tell you that at least from the lowest point of the trading session they have moved a tad bit higher. Let's keep a track of what's happening there as well. Separately, what's also backing the trend today is FMCG. So counters like Britannia as well as Nestle are outperforming. We also have Asian Paints, which is doing well in trade. Whether it is the fact that crude has fallen off, or the fact that palm oil prices are at 52-week low, or the specific news coming in for Britannia Industries with respect to the reject at the top level, all of these stocks are excited. Surprisingly, IT also is bucking the trend today. So Infosys, HCL Tech, Coforge are some of the counters which are actually in the green today. So that's definitely one, oasis of green. At 52-week low level, we have stocks like Voltas, IEX and GAIL. Of course, the list is really large of 52-week low stocks, but these are the three that caught my attention. Chemical stocks are also cracking as we speak. Look at the move on Tata Chemicals, 7 to 9% lower. Make Money, Fine Chem, RCF, they're all down in trade. Perhaps it's that entire nervousness around what's happening with China and the headlines coming in from there, and that's expected to impact the supply chain. So for now, all of these stocks are nervous. What's in the green today is is pharma stocks. So Ipca Labs, Alchem Laboratories and Divi's Labs are the three stocks that caught my attention, up anywhere between 2 to 5%. Power Grid, that continues to plunge today as well. That stock has taken it on the chin, down 6%. In fact, since ET now broke that story on September 19th about the possible acquisition of REC, that stock has lost more than 20%. Harsha Engineers, which is the new kid on the block, listed with quite a bit of premium. The issue price, if I remember it right, was around 330. The stock is trading at around 471, 43% higher on that one. On the losing side, Thermax has been under pressure for the last 2-3 days, down by 8% again today. Brigade Enterprises is seeing a huge fall. Angel Broking is the other one that we wanted to highlight. Motherson Sumi is in focus because they've acquired a Japanese mirror business for 5.2 billion yen. So that stock is in focus. And M&M Financial, Pankaj, continues the downtrend as well. It's down 20% over the last 3 days. And we haven't got any substantial clarification from the management yet. And that's the reason I think this stock is nervous.
Yeah, I mean, it's definitely a game-changing moment as to how they used to collect and how they will collect. So any clarity on that, I think, will be important. But as you pointed out, 17,072. But one stock among all other names that are doing well is Britannia. Along with that, even other FMCG names. There have been some management appointments over there. Winnie is now with us. Winnie, it's a different kind of management that we're talking about. Varun Berry still is there, and as well as you have Mr. Singh Kohli joining in from Jubilant.
Absolutely, the rejig which is coming in is what was expected on the expected lines. It was anticipated by the analysts coming in. Now, Varun Berry has been elevated as the executive vice